Hi,
Hello,
everybody.
everybody.
Woo, 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 woo.
I
How
swear, every week Monique gets more excited with her intros than the week before. And every week she frightens me. Good night, everybody. Welcome to the Digital Jamaica Live Show. My name is Katia Francis, and Miss Loudmouth over there is.
I am Monique McIntosh.
All right, and tonight we have a really special show for you guys. So Monique and I have always wanted to connect and collaborate with our brothers and sisters, yeah, over there in the rest of the Caribbean, really. Starting with Carico people, because
Yeah,
they're so cool, right? So we started the Digital Caribbean series where we're going to be actively reaching out to them and saying, hey, come and talk to our people. They can really benefit from your expertise and your
yeah,
different perspectives, etc. And
yeah.
so tonight is
Woo,
a
woo, woo.
yes, and we're talking to a very handsome gentleman by the name
Ye-
of Kevin Valley.
Yes.
In name both of them.
Yeah. Talk to me nice.
And Kevin is the co-founder of a company called Become Investible. He
Yeah.
is a chartered business valuator. Now, I don't know about you, Monique, but I've never heard of a chartered business valuator. I don't know
It
what that
sounds
is.
fancy. It sounds
But
fancy.
you
That's
have
all
a
I know.
very
It sounds
fancy
fancy.
website,
Fancy.
kevinvalley.com, that explains all of what he does. Okay? Right? And
Yeah.
he's going to be here. And he's also founder and host of the Caribbean Power Lunch podcast. We love.
Podcast. Yeah. Yeah.
Yes, so he's going to be talking about all of that, and he's going to be sharing tips and advice about how to make your business, whether it's an online business, brick and mortar, retail, tech business, how to make your business more attractive. And this is important because y'all hear about Clubhouse being valued at over $100 million and they never launched yet.
Them don't
That's a
launch good yet.
big company. And as you guys, we would have said to you guys over and over again, tech-based companies are some of the richest companies in the world, right?
Mhm.
So definitely there are investments to be had because Clubhouse was started through investments and funding, right? So there are investments to be had, and there are ways that you can improve your business model to be attractive to investors so you can scale. So that's what Kevin Valley is going to be talking to us about tonight. So I'm excited about that.
Yes, I'm super excited too. And Katie, what you mentioned about really reaching out to the rest of our Caribbean neighbors because we're digital Jamaica, but Jamaica doesn't operate within a vacuum. And we really are stronger together. The only way that we're going to be able to compete on the world scale in a real way, not just an individual basis, me get a bus, you get a bus, but for all of us to move forward is really for we do it together. So I am super excited about that conversation that's going to come up soon. But before we go into that, we have some information I want to share with you guys what's new with Digital Jamaica. Now, the main thing is that our blog and the Digital Jamaica podcast are returning. They're relaunching for our 2021 season on February 5th. Now, guys, we have some amazing interviews. We have some new, little sprinkles and things. You're gonna hear a few familiar voices. And there's just a lot that we have in store for you guys. This season is unlike any other in terms of some of the guests that are going to be joining us. And we really look forward to some amazing conversations. Additionally, we are inviting you if you have a unique perspective on tech, on digital, if you have stories you want to tell that you think would fit in with what the Digital Jamaica is all about and what we share in terms of our content, we're providing you with a platform. We're opening up for the first time to guest bloggers who want to share on our platform. And really, again, the nature of our community has always been about collaboration, has always been about working with the best. And
Yes.
we thought that it would be prudent of us, it would behoove us to share it with our community first and provide you guys with the platform that we have built. Yeah. So if you guys are interested, you can send us a DM, you can send us an email, reach out to us. You know how to get, listen, no problem getting through to us. Me, Arcadia. Like, yeah. So just reach out to us and we will go through the process of getting you on board to become one of our guest bloggers. So Kadia, one, what's happening within the tech and the digital space? Talk to it.
All
Talk.
right. So now it's time for our tech news roundup. And listen, for a very long time, I have been saying, what have we been using when we, for marketers, especially for marketers? You know, I have a thing for marketers. Hey, Joel, boo. Right, Joel and Kemoy and B. Welcome, guys. Um, So for a long time, I've been asking the question, and I'm glad Joel is here because Joel and I actually had this conversation. I'm asking, what have marketers been using when
Yeah.
they're creating their campaigns and so, because we're not a data centric kind of society. We're just not, right? Hi, Siobhan from South Jamaica. Thanks for joining. Um, and I've always wondered about that because our institutions are again not very good at collecting data. So I was very happy when
Yes.
Price Waterhouse Coopers (PwC)
Yeah.
published their Caribbean Digital Readiness Survey, and somebody borrowed somebody's name because I'm sure I have a guy called Digital Readiness Guy. I'm sure I have a guy that episode a year ago with the same name. But okay, you can write a name, that's fine. Right? So they did a survey, which is way overdue and much needed. And the survey wasn't a surprise to anybody in terms of
The
the
finding.
result, but there were some surprising things in it. Like, for instance, right?
Mm-hmm.
So the survey was a Caribbean survey. So there were respondents from the Bahamas, the Eastern Caribbean, Bermuda, Cayman Islands, Guyana, of course, Jamaica, and Trinidad and Tobago, where our guest tonight is from, right?
Yeah.
So the findings support what we have been saying all the time, that there's a wide gap between businesses that are leading the charge in digital and those who are struggling to keep up. And some of the major takeaways was that there's a problem with companies upskilling their employees.
Oh,
46%,
you say that again?
46%, almost half of respondents are
Yeah.
saying that they are struggling to upskill their employees. 46 believe their organization is behind in training workers with skills for the digital era, which is
Yeah.
why when I said, no disrespect to the Honorable Favor Williams, but giving children Microsoft 365 so they can learn Office is not equipping them for the future. You know what I mean? I'm just saying.
Yeah.
So that's what
Yeah.
I meant when I said that. Yeah, because I mean, there's there are a lot of jobs that have gone digital. A lot of people have lost jobs because the job role and function have completely changed. It has gone completely digital now. Or the technical skills that are needed to know do the job in the 21st century have changed. And because no training was being done, no skilling was being done, they have found themselves useless in the position that they're in. So they've been laid off, or their job has been given to somebody else. And there's also this restlessness too, to put yourself in a position where you can still maintain your job even if the skill requirements are different. And in a podcast episode with Matthew, I think Matthew from St. Kitts, we were having that conversation, and he was saying that you know it's about culture. It's about instilling a company culture, a digital company culture, where you make it safe and okay for people who are not digital savvy to express that and to be provided with the proper training that they need to become digital savvy. People need to feel secure in their jobs. You're not going to just chuck them out of the job, but you're going to provide them
Yeah.
with training that they need. So no surprises there. Um, Further findings is that 73% of respondents find that digital transformation has actually boosted productivity. Well, no shizzle shut up, right? But less than 42% feel that they are on target on integrating new technologies. So they realize that
Yeah.
digital is key to productivity, to boost productivity, but they are falling behind in terms of implementing
Implementing it.
integration. And I think it's about internal integration, as in operating system, as well as external integration, as in a digital being present and visible in the digital space, right?
Kadia,
And
you know, say me
20%
love, me
feel like
love,
they're mhm.
me love so them break this out, you know, and I love that they put
Oh,
it in
the
a way,
breakout was awesome.
them put
Yeah.
it in a way that people, as in corporate, can
Mhm.
receive it. Because a lot of the time you're shipping nothing that you have described so far in terms of the findings from this report is anything new to me. And
Surprising.
I am no big researcher. I am no big whatever, but I literally just have been looking. My eyes have been open. Your eyes have been open. Anyone with open eyes could see. But
Yeah.
just not set in for them language. So finally they may, process it a little better.
All right. So it's called the Price Waterhouse Caribbean Digital Readiness Survey 2021. Come on. All right. So other findings says that there's a lack of alignment or clarity on roles and responsibility relating to digital ownership, meaning that within the organizations there may be difficulties in pinpointing persons who will be responsible for the different areas of digital transformation within that organization, right? I think that that's what it means. And that there is an inflexibility or slowness where the biggest challenge is to their overall digital transformation. So some companies are inflexible, and this is another problem with businesses in Jamaica. I don't know if Kevin will agree with me when he comes on. But there's this inflexibility and there is no crisis planning. There's no succession planning. And it's like this. We have been doing this way for 5 million years, and we're gonna continue to do it that way because that is what has been working for us. And all the while, all around them, things have been changing and they're just not up to the time and they're just not ready. But as I said, the finding didn't tell us anything new. It didn't tell us anything that we did not know about. It didn't. So we're like, well, thanks for that. Thanks for confirming what we have already thought. But I think companies need to really look at this and really look at what it is that they're doing and kind of, speed it up.
Yeah.
But Red Stripe money, moving on to Red Stripe,
Okay.
have something going on over there as well.
Yes, so there have been some advancements or some stuff happening. Red Stripe
Mhm.
is to partner and collaborate with Rick's Cafe. No, why is this digital actually going to be rolling out some digital experiences? So just like how you may have an Appleton rum estate tour, they're gonna be building out something similar at
Oh,
Rick's Cafe, but with Red Stripe. Yeah, the home of Red Stripe beer, right? As well as integrating fundamentally within that entire tour and interactive tour and system, an entire digital rollout. Now, why? How does this make sense? Why does this make sense? They're looking to increase visitorship to Rick's Cafe from
yeah.
340,000 to over 500,000 persons annually once this is rolled out. Me say, ka-ching, 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 and a lots of opportunities, not just for persons directly related, but even the supporting economy, and it will even breathe more life into Negril and that community.
Right.
Yeah.
So I got
Mhm.
myself a new phone over the holiday money.
Oh,
And what phone did I get? I
you
got
got
a Google
Google
Pixel. Yes, I got a Google Pixel 4a, and it was
Mhm.
an adjustment from my One Plus. I'm a One Plus petty. I love One Plus, right? But I wanted to try a new phone, and I heard good things about the Google Pixel, and there's even more good things about the Google Pixel phone for any of you here who may have a Google Pixel phone. All right. Hi, Gerard. Thanks for joining. Gerard is also from Trinidad and Tobago. So Trinidad is in the house. Yay. All right. So Google is using machine learning via its camera on its Google Pixel flagship phones to measure heart and respiratory rates. So just like a doctor watches a patient's chest rise and fall, Google's features will mimic that procedure according to Jack Poe, product manager at Google Health. So Google Health
Machine learning.
machine learning, and actually that's what Instagram uses too to decide what content they're going to push to your feed, which is why you need to make sure that you're always checking our stories and checking our page so you can always see what's happening, because it's the persons who you interact with the most on the platform that you see on your feed. So shameless stuff. Yes. So Google Health has been out for a little bit, right? And they've been trying to find ways of improving, especially now that this pandemic thing, and you find that it's the unhealthy people or people who have pre-existing conditions or they're not at their peak health who gets the most affected or gets the worst affected. That's the
Yeah.
yes,
Yeah. And
right.
in reading in reading up as well, what it was saying is that normally some persons who don't have, say, high blood pressure or whatever, the only time you get these things checked is when you go to the doctor every 6 months. For some people,
Yeah,
years pass in between the time that they go. So even though you're not trying to use this to diagnose any illness or anything, tracking it over time, seeing your progress with exercise or whatever, can help to show signs or show what is happening.
yeah,
Oh,
it can act as an early warning sign.
yeah,
And
yeah.
we can have the conversation about Google and spyware. That's Okay, so congratulations to the Jamaica Computer Society who celebrated 46 years on January
Wow,
15th this year. They
that's
are
older
one
than
of,
us. Oh my
yes,
God.
that's what they are one of the longest going professional bodies in the country,
Yeah.
having been formed in 1973 and incorporated in 1975. So
And
congratulations.
we're happy
Yes.
that they are tech-based organization or
Well,
body.
they started out as an ICT based organization, which is still tech,
Yeah.
but some people will point out the differences to you. So we
Okay.
want to be political.
All right. And last, by no means least, with regards to the updates, and I never really know that this never happened already, but apparently it never happened, so it'll happen. Jamaica is set to stop all analog TV, and so they're starting out with a 1 year transition that's going to turn off like the billboards, the digital billboards that are analog. I'm not sure which ones. I don't really know what they were talking
The
about.
one that when them click here,
Well, I don't know. Anyway,
the one that are
um,
on the thing and it turns and then the whole picture comes on.
I don't think that's it. I don't know which outside
Oh,
broadcast relies on analog. Anyways, that's what they said. But more importantly, for those of us who still have an antenna, we catch, and you pick up your
people
TV.
still have antennas on it.
Yes, okay, there you don't
Auntie,
live in
it's
country.
still like
You don't
brother Jamaica.
you don't live a bush. When you pass like Kalaluman and so, them still a sell antenna. Anyways, by 2023, the older that I got turn off. Them want use the broadband spectrum, the wires and the cables and the stuff that they have already existing within the pipeline to do other things. Like maybe they may specify certain educational channels to support because of what's happened with COVID. They realize they need a backup plan, right? Advanced wireless systems. So I'm hoping that finally our telecoms services are going to get some support. So they're putting their energies
Okay.
over. Yeah. So
You're way more optimistic than I am because our telecommunication service providers need Jesus.
they
But
have some.
anyway,
So we'll see how it rolls out. But by 2023, those antennas, although the fact in major metropolitan and cities and even some rural areas, they've been cut out, them are got done, 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 done. Them time there.
well, that means a lot of people not gonna have
Yeah,
televisions, clearly. All
yeah.
right, so now it is time for our hot topic, and our hot topic this week is becoming investable. How do you fix up? Look sharp. It's okay. It's a British reference. Sorry. But how do you fix up your business so you are more attractive to
Yeah.
investors who wants to give you their money, right?
Mhm.
And this is in light of the whole clubhouse thing that has been happening. In case you guys didn't know, Clubhouse is now valued at $100 million. Now, Clubhouse hasn't even been fully rolled out yet. They're only on iPhones. They're only in the Apple Store, right? So they haven't even done a full rollout, and they're at $100 million, which goes to show you the power and the attractiveness of tech-based businesses. So how can we get our local businesses, online, retail, tech-based, whatever, to become more attractive to investors? And to talk to us about that, experts, because we don't know not about it. So we invited an expert, Kevin Valley. He is in the business of raising capital, and currently he specializes in helping medium-sized businesses with annual revenues between, get this, oh, US 1 million to 25 million to attract the funding they need. So
Oh.
maybe not our little business, or our little business very right? So with over 12 years of experience in corporate and investment banking, Kevin has been featured as a panelist at a variety of local, regional, and international business events on entrepreneurship, business development, and private company investment. Now, Kevin is a chartered business evaluator, a
Yeah.
partner at the Aspire Fund Management, a private equity firm based in Trinidad. He is the co-founder of Become Investible and host of the Caribbean Poland. You see, we love people who are generous. We love people in a whole for different spaces, right? So Kevin is definitely one of those, and Kevin is going to be on now to talk to us about becoming investable. Welcome to the Digital Jamaica Life, Kevin. It's great to have you here.
Hi, Kevin.
Good evening, ladies. Good night, everybody from around the world. How's everybody doing?
We
Well,
are.
festive, as Monique would
Well, yeah, well,
say.
I heard the beginning of this show. I was like, whoo, but I don't know if I have enough energy for this show to keep up. It's like, whoo. All right, I decided to drink a little bit of magic tea.
Well, you're
Sounds
nasty.
good. All right. So, Kevin, we want let's talk about fund investments because that's not something that we know about. So, what is a private equity company, by the way? Because you are partner in a private equity company. What does that even? That sounds like some Wall Street white people things. What that mean?
Yeah, so a private equity company just to mean like really, really oversimplified. It's a company that accumulates funds from investors for the sole purpose of investing in private companies. That's it
Yeah.
in a nutshell.
Okay.
Privately
Right.
owned. Once it's not traded in the stock exchange, it's a private company. And
Right.
private equity funds they try to channel capital into those companies to invest.
Okay, so is it private people with a whole heap of money and want somewhere to park it so it can have some kind of return? And is that kind of what it is?
So it's
Like the angel
And
investors
companies.
and stuff like that?
it's anybody really. So it's going to be private individuals, high net worth investors, as well as institutional investors. So think of your pension funds, your insurance schemes,
Insurance.
yes, your asset management companies, and so on.
Oh,
Mm-hmm.
okay. Okay.
Mm-hmm.
So the company that you formed become investable. Let's talk about that initiative.
Sure.
Was it around, and I know it's around getting businesses ready for investment, but explain a little how the concept came about and what really.
Okay. So how and why the concept came about. So I spent, and you know, I know you read my bio. So I spent over 12 years in investment banking and, providing financing to a variety of companies, variety of sizes. So large companies, small companies. And I realized there were differences in in the investment appetite for larger companies and smaller companies. So for
Mhm.
larger companies, so think of your large conglomerates, your Grace Kennedys in Jamaica or your Neil and Massey's here. They have no issue with people being interested in investing in them. The investment decision usually comes down to a pricing decision. So what is the interest rate? What percentage stake am I going to get? However,
Yeah.
when you look at the small and medium-sized companies, a lot of the reasons they don't get funded is because of gaps in their business model or gaps in their operational systems, or how are they positioned in the market, you know. So so yeah, I am very passionate about small and medium-sized businesses. I actually think those are the lifeblood of an economy, especially private small and medium-sized businesses. I think that's
Yeah.
where you're going to get much of the economic growth. That's where you're going to get the jobs and everything. So I root for them. However, when
Right.
they come to me and I'm wearing my banker hat or my private equity hat, and I see these holes in their business model, I just can't expose my investors to them, right? And private equity funds and investment banks are not in the business of actually providing advice to companies trying to seek financing. We're in the business of finding the best deals, getting the highest return on investment, and having a good day.
Making the most money,
That's right.
making the most return for your investors.
So there I saw a gap. There I saw a gap. And I decided, okay, well, let's start a company where we actually focus on those companies who can't get the financing or who weren't able to get the financing, because there's a big disconnect in the knowledge available, in the information available to the companies who are looking for financing. Like, all they know is that the bank said no, right?
Mm.
And in the
Yeah.
bank's minds, all they know is that, oh gosh, this company isn't ready. We can't find a good investment. Ting, 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 ting. Right. So Become Investible seeks to bridge that gap by improving the efficiency of these companies and how they position and everything.
Okay.
Wow.
So
Yeah.
yeah, you are talking about gaps in the business model, right? So what are some of those gaps that businesses need to look out for, just in general, whether you're small or medium sized business? Because we mostly talk to SMEs, right? So if you're
Mhm.
an SME, what are some of those gaps that you need to pay attention to, and how can you plug some of those gaps?
So you alluded to it earlier. The I think the biggest risk that many small and medium-sized companies face is
Mhm.
that, especially for the founders or the CEOs or the owners of those companies, is that the business cannot survive without them.
Oh,
You know,
Mm.
I talked to many of them. I've met with many of them, and many of them experience it. They have one of their deepest fears and their deepest concerns is that they cannot go for 2 months and say, "What, I'm going to go to Hawaii for 2 months. I'm going to go to Hong Kong for 2 months and have my business run business as usual."
right.
Right? What usually happens is that when they go on for a week, they're just getting calls and texts and WhatsApps like, "Hey, this has happened. This client is upset. What to do?" You
Yeah.
The
know.
house is burning. The house is burning. Ah.
Exactly, and it's very stressful for them. And
Yeah.
yeah, it's very stressful for them. And even in addition to that, they think about succession planning, right? So many of them, I mean, some of them are young, but many of them are in their mid
Yeah.
40s, or heading into the early 50s, that kind of thing. So they may have about 20 years or so again, to be strong and energetic, depending on their fitness levels and whatnot. But ideally, they want to know that they have lieutenants that they could pass on the mantle to, right? And
Right.
because many of these businesses were a very like specialized knowledge. Most of the intellectual property, most of the IP is in the heads of the founders. You find it, you
Okay.
see difficulties in transferring that knowledge and transferring that unique
To
skills and
somebody
everything.
else.
Yeah, to a protege or whatnot. So
Yeah.
that is the biggest issue. Other
Right. So far you say one of the biggest issues is lack of succession planning, meaning that the founder is the one who basically he is the business, and without him there, the business kind of will collapse.
he or
And the
she.
second one is he or she, sorry. And
Mhm.
the second one is a transfer of knowledge issue. So the founder who has the knowledge all in his head, the knowledge for the software, the knowledge for the process, etc., they're not doing a good job with transferring that knowledge, or designating tasks to other people, or hiring enough people to be able to manage this and successfully transfer the knowledge. So what about a smaller, and I guess this is really more evident in smaller
Micro.
businesses. Yeah.
Mhm.
Is that the
I'm
case
sorry,
for you?
I didn't get the last thing. Is you're saying that is more evident in small businesses?
Yes, I'm asking. Yeah.
Yeah, no, so I would say in terms of that succession planning issue, you'd see that especially in the low mid-market firms. So the same bracket of firms that make annual revenues between 1 million and 25 million US, you especially see
Mhm.
that there. And the reason I'm so specific about that revenue range is that within that revenue range, you'd find that they have companies that already have some level of traction, already have some level of brand recognition in the
Yeah.
market they've been operating.
Success.
Yeah, they've been operating for a few years, but they're still not at that large level where where investors are tripping over themselves to fund them. You know,
Yeah.
they still have some things to polish up before they could provide they could prepare a credible investment proposal to investors.
Hmm.
Okay. So those are two gaps. What about smaller businesses? Maybe that and that hasn't gotten to the 1 million mark. And the reason why they probably haven't gotten to that 1 million mark is because they're having some of these internal problems. What are some of those things that they need to be looking out for to grow their business
Build
enough
to get
that
there.
become investable? Yeah.
Okay. So for these smaller businesses, so let's say less than a US 1 million. And again, these aren't hard ranges. You might very well find a medium-sized company that makes, I don't know, half a million US a year.
Right.
It's just like a ideal range, so to speak.
Yeah.
Right. So in terms of these small businesses, what you find is that they have gaps in their financial controls, right? So let me say that in layman terms. Many times they're operating, but they don't actively monitor their numbers. They don't actively monitor their expenses. Who owes them? Do they have their receivables listing and all of these
Right.
things? And it may sound tedious and monotonous, but when you're looking to get interest from a serious investor, you have to dot your I's, cross your T's, and make sure
Yeah.
that it has a nice curve. You
Yeah.
understand? And
Yeah.
and in addition to that, you look at simple things like just your customer insights. You know, just this evening I was having a meeting with my team, and I was saying how would we call it? Intimacy with your customers, and it's like no. You know, that sounds a little what you call it uh what just saying this saying where it is kind of date rape saying. Anyway, it'll come to me. But so we call it customer insights instead, right? So was that?
Went safe.
Say again?
You went safe. So you were going provocative and then you just
Yeah,
did
let's
a
get on to that.
180.
Yeah, that's right. Let's just get back to the business, right? Right. So your revenue comes from your customers, but do you actively monitor your customer feedback? You know,
Mhm.
imagine like you're trying to raise capital to investors, and you say, yeah, man, we expect
Your
revenues to
customer
go
facing.
100%. And you go on Facebook and you look at your
Your
comments and you
hashtag
see
cancelled.
and you people and you're seeing a 1 out of 5, you're seeing 2 out of 5.
Yeah.
You know,
Yeah.
there's a
Yeah.
mismatch there. And
Yeah.
Yeah.
beyond that, so customers provide your revenue, but you also have to look at the provision of the how you provide the product, right? So
Right.
Yeah.
you get your raw materials from your suppliers. Do you
Yes.
know how your
So,
suppliers feel about you? Mhm.
yes.
So what you're
So it's
really
about relationship with you and your service providers as well.
Yeah. So what you're
That's right.
really saying is the core is really on the business itself, like the
Yeah,
business of doing your business. So
that's
not
right.
maybe not really the provision of the actual service or product that you provide, but no looking at how is this really operating and flowing, the management of those processes, how these
And your
processes
relationships.
really the business development work.
Mhm.
Mhm.
And the best way to manage these is to put in systems because you don't want to have to be actively managing it, right? That's not efficient. Again,
Yeah,
you
with
want to make it
time.
in a way where you can go and take that vacation or what have you, right? So you need to put in systems, processes, or maybe even if those systems are just hiring a virtual assistant to do this, or hiring a,
Yeah.
you have your salesperson who's in charge of this, or you have your customer relationship person who's in charge of this.
Yeah,
Right, which and it's the same, and it's the thing that you just said, Kevin. That is what leads to, even if your company grows, that's what leads to a lack of succession planning. Because you started this thing, it's your baby, you hold it up so tight that
yeah,
you don't
man.
know what you need to do to make sure that one, you're delineating. There's a thing what they call central management and decentralizing management and
Yeah,
operation, and how that can actually help your company to grow. So
yeah,
everything is centralized, and the central thing is you. It's not even a
yeah.
central thing. It's you. So you
You
dictate
are the
and
system.
you try to have such a tight control over the thing that you're actually stifling your own business. And I like the thing that you said about, pay attention to your customers and pay attention to the service providers, because nobody talks more crap about you than the people that you get services from, right?
Yeah,
So you need to pay
yeah.
attention to those two. And somebody in the chat, Kevin was talking about how you market your business. Is
Mhm.
that also a factor?
Yeah, so I actually saw another one of the problems that one of the very common problems that companies have, especially like the small and even some of the medium-sized companies have, is that because what they're doing might be so niche and might be so unique, is that they might not have broad market awareness. And
Oh,
beyond the awareness, you have the broad market acceptance, right?
okay.
You may have like one or two people in charge of sales and whatnot. So you have that kind of those cash flow bottlenecks.
Right.
Yeah. I saw Kimoy spoke about product market fit. And I think it's an excellent point. And especially when you look at startups, at startup
Yeah.
funding, that's when you really need to drill down in product market fit.
Right.
You're so passionate about this product, but do people really want that? Is it a want or a need? Is it a nice to have, or are you saving my life with this product?
Yeah, and sometimes what tends to happen too is that we see somebody else doing it and it's successful for them. And we think, okay, I'm going to jump on that too. You have done no market research. You don't even know what the success factors were for them. And you just
Right.
jump on and start doing things. And what tends to happen is that you find a bunch of people in this one niche. Everybody hitch up in this one niche trying to do the exact same thing, talking to the same people. No differentiation is going on. No product market fit is going on, and then they wonder why their business is not growing. So let's
Not
talk about,
one.
right. So let's talk about what are some things, what type of investors should you really be going after if you're a smaller business? Or should you, do you recommend that they, take some time to actually expand their growth? Or do you think that at some small businesses at the stage where they are can attract investment if they kind of ship up? And if so, what kind of investment can they attract?
So the type of investor you should be looking for is really dependent on the stage of your business.
Mm-hmm.
Yeah.
So if you're a startup, fresh out the kitty in idea mode, you haven't brought anything to the market yet, you're looking for an angel investor. But before you go to the angel investor, you want to make sure you at least have some money of your own put into that, or at least you spend a lot of time testing out your prototype and whatnot, and see if you get some family and friends involved. Right. So after you get the angel investor, maybe even without getting angel investor, you'll go to a venture capital firm, not a private equity firm. There's some confusion. There tends to be confusion between venture capital and private equity. Venture
Mm-hmm.
capital is early stage, startup stage. Private equity is when you're established already and you're already making some money.
Okay.
Right. So if early stage, you're looking at angel investors and venture capital. If you're a small business, You could still look at venture capital. Venture capital do invest at later stages to some level. They do some growth stages or whatnot. Private equity might also be an option. The banks, so much, not really, unless maybe you find a nice commercial a commercial bank or a business bank that's willing to give you a loan or so. But yeah, you're as a small business, early stage business, your market is really venture capital, angel investors, and maybe some private equity firms, depending on your level of traction and how unique your business proposition is.
Do
So
you recommend bootstrapping or do you actually recommend investment?
No, you mean you
Or
have to bootstrap I mean, everybody bootstraps in the earlys. I mean, I'm sure you guys are bootstrapping right now. I mean, Become Investible, I won't lie to you, we're bootstrapping right now. You have to bootstrap in the earlys, but when it comes that you're looking for investment, that's where you really
mhm.
start to, you feel unstrapped. That's yeah, that's actually a product I'm working on.
What is a red flag? So for a young company, they've gotten some lucrative deals, or they're the clubhouse, right? So they are the fresh out of the gate, but they have these huge potential, and people are knocking at their doors. Or you get in front of the right people, and somebody says, I want to invest in your company. I want to get in early. What are some of the red flags that people should look out for and run away from?
People, you have, I mean, investment is a long relationship. I mean, most sophisticated investors, they invest to buy, hold, and prosper, at least 5 to 7 years. If the founder of the company is a character that you just, if your gut just tells you, but I can't trust this person, and yes, I'm
so
training.
it's part it's
I
all
know
about
some people in the audience are asking, I'm training. Yes, if you know you just can't trust this person, mm-mm-mm. And also you're looking at you want to know that this person is not okay. Well, passion is, they say passion all the time now, but what's the vision and purpose of this business, right? You want to make sure that you fully understand that person's long-term vision for the business, because products and services are really a means to an end, right?
Mhm.
The business exists to solve problems or to achieve some bigger goal. The products and services are just methods to do it. They could have a different product next year. A pandemic could happen, and then they have to pivot and provide a product in a
Mm,
different way. But it
yeah,
all aligns to a bigger,
the
longer term goal.
purpose.
Yes, a purpose. Yeah, we'll go with purpose. Um, yeah, so I think it's, yeah, just really align with the purpose, right? In terms of the skill set of the team, right? So if your business is primarily tech based, which many businesses are now, and you have to spend a lot, the investment is to build out a tech platform or whatnot. You want to make sure that the company has a tech person on the team. You want to
Mhm.
make sure that you have a tech person on the team, because you need somebody, your team needs to be able to monitor that investment, needs to know that if the developer says, well, this costs X, it really costs X to do that, and you're not getting shafted in a way. And also, just from a intellectual property standpoint, if the developer knows your idea and he knows how to build it, it can end up being a case of catch me if you can.
Yeah. All right. So that was awesome. So let's shift a little bit, Kevin, to talk about the Caribbean Power Lunch podcast. What is that?
Yeah. Okay. So Caribbean Power Lunch, how it started is a podcast dedicated to featuring Black entrepreneurs from the Caribbean.
Mm,
Yeah. We're
mhm,
we're actually
That's nice.
yeah. So it's targeted to people who may not actually actively be in business right now, but are
Mhm.
thinking about jumping into business and that sort of thing. But right now, we're actually looking to evolve that. We're looking to change the focus of that podcast, especially now we've seen with the Black Lives Matter movement and everything. We black businesses and black people are getting their spotlight right now. So that goal is achieved, right? But what we really want to do is provide support to small and medium-sized businesses. So
Yeah.
that's what we're going to evolve into. So we want to still talk to Caribbean people, still talk to experts in business, but really about unpacking and uncovering their frameworks, what makes them successful in business, right? What can people learn from? So as opposed to what we had before, where we're just doing the entrepreneurship stories. Now, I think this is the first place I've said this in a public forum. So Digital Jamaica,
Exclusive. Yeah.
Mhm. Yes, Preet, well, you must do your due diligence on anybody looking to do business with, for sure.
Discover St. Thomas J.A. is asking about eco branding. I'm not sure if you're in the right place. Discover Jamaica, but now that they talk about eco, what about eco-based businesses? Is that some a business type that you would say is attractive or can be attractive to investors if your business have
Well,
a eco focus
well,
or a
environmental social
sustainability
government.
focus?
Oh, sorry, go ahead.
No, continue, please.
Yeah, environment and social governance and impact investing and the like is actually, it's getting bigger and bigger now.
Mm-hmm.
So I do see initiatives that are more about environmental efficiency and the like being more attractive to those type of funds.
Right.
I'm not sure if they're the most attractive to the pure investor profit or investor
Yeah.
return type of investors. But if
Yeah.
you want to find investors with a heart, yeah, the eco could work.
But
Investors with a heart, that's a thing.
Yeah, people want to.
yeah.
Yeah, no, yeah, we invest with a heart. At Aspire, we invest with a heart.
Yeah.
Oh, that was a
And
shameless plug for his business. Okay, all right, Kevin.
and I think maybe that may even come in within the angel investment kind of category too, because at that space, you're trying to assist, help, give a hand back, grow this concept, etc. Because a lot of the time, investment at the end of the day is really about making the best return for your money. So if
Yeah.
there's a type of business that's going to allow you to get a 50% return on your money within a shorter time frame than one that's 20% over, a
Mhm.
longer time period, depending on what the objective is for the investor,
Okay.
they would choose one over the other.
We're running out of time, but Kevin, I wanted to ask you quickly. Do you see, is there a conversation that you are having with investors about expanding the way they think about investment and the businesses that they actually go for investing in? Because are we playing it too safe in the region? Because again, the whole clubhouse situation and how they're readily investing in these tech-based and online-based businesses and they are seeing returns. So are we playing it too safe? Is there room for our investors to expand their thinking as to what investable actually means?
Okay, that's a really great question. So let me just treat it gently. Okay, so in terms of the new business models that are coming about, I mean, at the end of the day, most of these institutional investors, so the private equity funds, the asset management companies, the pension plans or whatnot, they they have a duty to their investor clients to invest responsibly and make sure that when they invest their funds that they could see they have line of sight into how am I going to get back my money and how am I going to get a profit on my money.
Yeah. Yeah.
you know so I mean new business models encourage innovation. Innovation is how we continue to grow, right?
Yeah.
But what entrepreneurs need to stay focused on, especially if they're trying to raise capital, is you need to show the investor not only how am I going to get my money, how am I going to get a return, but you need to show that you have managed and you've been able to de-risk this investment for them, right? Because
Yeah.
it's a lot of companies come in saying that we're going to make all the money. We're going to make all the money in the world. Like I have never, I mean, in my 12 years, I've never been in a pitch meeting where an entrepreneur or CEO or CFO, anybody says, Kevin, boy,
We're going to make a
if,
loss.
if you give me your clients money, I am going to lose all. Nobody ever says that, right? Everybody's, everybody says, yeah, we're gonna, what we need is 1% of the total addressable market, and yeah, we're gonna be fine. It's gonna be $1 trillion company, But
Yeah.
you really need to take your time and show us how you could de-risk this investment for the
So
investment.
long and short is both sides have to be realistic
Yes.
Yes.
about the okay. Is
And
there
you know,
anything
Kadia,
coming up?
it,
Yes.
before you move off of that point, I think the real key for that is that a lot of them don't really understand. And maybe until our generation reaches closer to the point of making some of these decisions, I'm not sure that these things are going to change, particularly within the Caribbean region. We do have limited resources. It's unfortunate. I wish it was not this way, but we have limited resources, and a lot of those in power and with the money just don't understand digital. And so
So
Yeah.
could be clear as day as to
mm,
how this could work, how I've de-risked, how I am first to market in this market, how Facebook did it, how Snapchat did it, how XYZ did it. But the fear of it not working out is holding us back, particularly with tech.
yeah, and
Awesome.
I mean,
Awesome way to close. Yes,
yes,
Kevin. You
especially
wanted to
especially with tech. See, the type of business model that investors fear the most is the build it and they will come model, right? You need to. It takes an investor with a significant amount
Grit,
of. Say it.
grit.
Panero.
Yeah, all right. Let's use grit. I was going to say another word, but yeah, let's go with grit. Grit or with gumption, with bravery, right?
Yeah,
Who really
balls,
okay, right? Who really understands the tech sector and
landscape.
who has the capital
Mhm.
to put it out, because these tech investments, they're usually in the millions that they ask for,
Yes,
so
yes,
things like Clubhouse and everything. I mean,
yeah,
we don't know that Clubhouse is actually worth $1 billion. Yeah, they got an investment at that valuation, but see the thing about valuation, right? I mean, I'm not gonna go into a whole thesis on valuation, but the thing about valuation is that it's based on two core factors. That's risk and growth.
yeah,
So when lots of investors just look at the growth alone, right?
Mhm.
And I mean, it's the tech sector as a whole is just it's it tends to be very inflated because you just have everybody overly optimistic about it, but you have to look for where are the underlying revenues, like how much money has Clubhouse actually generated right now. Has anybody who uses Clubhouse, have you paid anything to use Clubhouse?
no,
Do you receive
No,
ads when you're on Clubhouse? I don't know, I haven't been on
no.
Clubhouse. No. So
I
you
don't know
so
about
essentially
ads. I don't
say
know
again.
about ads. I don't know if they run ads on Clubhouse. I've been wondering how they make money as well, but
I
So
don't
it's
think
it's
that's
the
monetizing.
optimism that is really floating Clubhouse
Yes,
as you say.
I don't think that they've started monetizing.
Yeah, but the thing is that they see that okay, the world is taking Clubhouse by storm, so they see any potential to monetize later. But
Yes.
there's a big X factor where we don't know how much money we're gonna make.
Yeah,
Yeah.
So behind
Yeah.
every Facebook and Snapchat and Uber investment that went to the billions, you have millions and millions, or at least hundreds of thousands of
That is yeah.
other companies where
that
they found
didn't.
yeah that
Yeah,
didn't work.
a lot of social media companies come and die a horrible death.
Yeah,
Some of them quickly, right? So and to the clubhouse example is kind of unrelated to our own experiences in the Caribbean. First of all, they're white. So yes, white people always get invested because they're white and they're talking to other white people, and that's kind of how they operate. I'm sure Clubhouse was a non-white company, they probably even wouldn't get the valuation that they did get. So yes, I also do think there's some inflation there. But also you're talking about a country that is way more tech integrated and tech advanced than we are. So their perspective and their outlook on tech and these kind of factors are way different than ours. And I guess that too gives their investors more confidence.
Mhm.
yes.
As well. So there's also that. Kevin, is there anything you want to plug? before you jump off? Anything you
Yeah.
want us to know about?
If there's
Okay.
anything I want to plug, sure. So I mean, so for all small businesses that are looking to get investment or so, and you want to know, well, is my company investable? My Become Investible actually has developed a roundtable investability diagnostic tool.
Right.
You jump on, you answer some questions, and you'll be guided by us. You get a coaching call with it. I mean, there's a payment for it. It's $100 US, but you get a coaching call with us. You go through our investability diagnostic tool, and afterwards you get a report that is generated based on your answers that identifies your gaps and gives you suggestions on what you need to do to become
Right.
investable. All right.
Yeah.
Awesome. Awesome.
So
And where do
actionable
we find that
advice.
tool?
Say that again.
Where do we find the tool?
Oh, um, well, for now, you just come reach out to us to get the tool. We'll have a link to it just now. The tool is still in a late stage beta mode, so it's not fully live and available to the public now. So once if you reach out to us, we will grant you access, in that private forum.
Oh,
Okay.
so it's so what? What's your website? Becomeinvestable.com
Yeah,
or how do we?
becomeinvestable.com. Yeah.
Okay, awesome.
Okay.
Thank you so much, Kevin, for being on the show and answering our silly questions about things we know nothing about.
Thank you. Thank you.
We really appreciate you coming. And guys, ladies, Kevin is single
Oh Lord,
and,
what are you?
and
I thought
he
this was a business show. What's happening?
he that power strong for Jamaican women.
I I guess
So
I guess I guess
my
I should go.
qualified ladies
Uh I guess
in
I
the
should
chat.
go. Kevin, Kadia is single. I see two Ks, you know.
Okay, that's all the
You
time
did
we
it
have.
first. You did it
Thank you
first.
so much
You
for
did it first.
I did Jamaica. Money can't believe in that. But yes, thank you so much, Kevin, for joining us. That was very
Yes, thank you
informative.
very much for having me.
Um,
This was a lot of fun. This was a lot of fun.
yes, it was also fun for us too. And let me tell you something, you Jamaican people. Now let me tell you from the truth. I'm going to choose to make Kevin do
Hurry
this.
up. You have 20 seconds.
20 seconds. It took nothing. It took absolutely nothing to get Kevin on the show. Everything I asked him for, he sent on time, no quarrels, no fuss. Can we have the same kind of reciprocity from y'all? I would really appreciate it. Thank you so much. Kevin, thanks for being on the show. Thank you guys for
Until
joining
next time,
us
guys. See
and
you.